So paper 1 is now done. I thought we'd take a little look at paper 2, what you need to know for that, coming up the week after half term, so Tuesday the 6th of June at 9 a.m. So there should already be a list of topics from paper 1 that you've already revised. So things like the role of the accountant, the difference between bookkeepers and accountants, financial and management accountants, that kind of thing. Types of business organisations. Double entry, so source documents, books of prime entry, ledger accounts, adjustments. So these are all things that were in paper 1, also in paper 2 potentially. Ratio analysis, so you need to be prepared to appraise business performance using financial statements and ratios. Investor ratios, things like earnings per share, dividend cover, dividend yield, all of that kind of thing, and also professional ethics. So I'm hopeful that you've got a good grasp of those. Now we can have a little look at the things that will only appear in paper 2. Okay, so budgeting, that's one big area. So you need to know why we need to do budgets, what they're useful for. You need to know the difference between zero-based and incremental budgets and the problems with both of them and the advantages of both of them. Types of budget that could be examined could be cash budgets, sales, purchases, production, labour, master budget, which is your budgeted income statement and statement of financial position. And don't forget that all of those are in monetary amounts with the exception of the production budget, which is always in units. And the labour budget is often in hours and monetary amounts as well. How you can use budgets for planning and control and the calculation of variances. So a bit of a link there potentially with standard costing, but adverse and favourable variances, you need to be able to calculate those. Marginal costing is actually a year 1 topic. It was in the old AS exams. So you need to be able to split your costs between direct, indirect, semi-variable, fixed and stepped fixed costs. You need to be able to calculate contribution, which is your selling price minus the variable costs. You need to be able to calculate break even, which you should know by now is fixed costs divided by contribution per unit. So target profit, that's where you add the fixed costs and the target profit, divide that by the contribution per unit. That tells you how many units you need to produce and sell in order to achieve that level of profit. Margin of safety, so that's the excess units over and above the break-even point. You can express that as a percentage, so find the excess, divide it by the current output, multiply it by 100, that will show it as a percentage. It could also be expressed in terms of revenue as well. So paper 2 topics continued. We've got standard costing and variance analysis. So you need to know its purposes, its advantages and its disadvantages. You need to be able to calculate and interpret variances. So you need to be able to do the materials, price and usage variance, the labour rate and efficiency variance, and the sales volume and price variances. I'm not going to go through all of those now. There is a separate video on this. The interrelationship between variances, so how, for example, a materials price variance could have affected the quality of the materials, and that can have a knock-on effect with the labour efficiency variance. So if we've got poor quality materials, we can end up wasting time and materials, so that will give us adverse usage variances and adverse efficiency variance for the labour as well. You need to know how to reconcile budgeted cost to actual cost. So remember that adverse variances will increase cost, whereas favourable variances will reduce cost. When we come to reconciling the profit, an adverse variance will reduce profit, whereas a favourable variance will increase profit. So make sure you can do that. Absorption costing, some terms you should be familiar with. So allocation, so when we allocate costs to a department, a cost centre, that's where they belong just totally to that one cost centre. Apportionment is where we share them out amongst the different cost centres. Absorption is where we absorb the overheads, the total overheads for each department into the units of output. And then an under absorption is where we haven't absorbed enough, perhaps because our output was lower than we planned. And over absorption is where we've absorbed more than we planned because our output, for example, was higher than we thought it was going to be. Calculations, so you need to be able to allocate those direct costs, apportion indirect costs, and calculate overhead absorption rates. So you're looking to calculate the full absorption cost of a unit of output and then potentially mark that up to find the selling price. As it says there, calculating selling prices, benefits and limitations of it, and comparisons with other costing methods for inventory and for profit calculations as well. So what's it good at, what's it not so good at, and how does it compare with things like marginal costing and activity-based costing. Paper 2 topics continued, activity-based costing, or ABC. So you should be familiar with terms such as cost pool, cost driver, and attribution. So cost pool is the area of the business that's collecting the costs. The cost driver is the activity that goes on within that area. And when we do attribution, we're attributing costs on the basis of the product's consumption of the particular activity. So, for example, quality control inspections would be a cost pool. The activity that is taking place there is the inspections that are being carried out, and we would attribute the overheads from that pool to the units of output based on how many quality control inspections were carried out. So for calculations, you need to be able to allocate direct costs and then use the cost pools and drivers to attribute the indirect costs to output. You can use that again to calculate the selling price once we've got the full cost, so your variable cost plus the overheads, and then mark it up by the appropriate percentage. You need to know the benefits and limitations, and again, comparisons with other costing methods for inventory, profit calculations. So remember that with activity-based costing, it's very much a development of absorption costing, so it should be more accurate, but there's a lot more work involved. That's the major downside with it. Okay, next topic, capital investment appraisal. So this is all about your payback and your NPV. So you should be familiar with those terms: payback period, net present value, discount factor, cost of capital. You need to be able to calculate payback period and net present value. You need to be able to explain the benefits and limitations of capital investment appraisal, and you need to be able to evaluate projects using capital investment appraisal. Okay, so that's the main topics, the stuff that you need to learn between now and Tuesday, the 6th of June. And then just a reminder of how the sections will break down and what's been in them previously. So section A is just all about AO1, just basic knowledge. You're going to get 10 marks from your multiple choice questions, could literally be on anything. 20 marks are going to come from basic computational questions, and that will include some short written questions, 3 markers. Previous topics for these have included little budget questions, so production budgets, labour budgets, cash budgets. Marginal costing and break-even has appeared in there. Net present value calculations, absorption costing, we've had overhead absorption rates and profit calculations. We've had ratio analysis, and we've had cash flow calculations for your capital investment appraisal. So cash flows that need to be calculated in order to perform payback calculations or NPV calculations. Disposal of non-current assets have been in there in the past, and we've had extracts from financial statements, so drawing up owner's capital account, for example. But yeah, section A, fairly straightforward. As I said, those are the things that have come up in the past. No guarantee as to what might come up this year. We have no idea. Section B, we get the longer questions. So 2 20-mark questions, and these are generally split into 14 marks from computations, calculations, and 6 marks written. So often the 6 marker is linked to the 14 marker. So don't forget to go back and look at the figures you've calculated, and you can quote those often to get the extra marks. So previous topics in section B have included cash budgets, obviously a more involved one than would have appeared in section A. Activity-based costing in order to calculate cost per unit. Absorption costing has appeared in there. Discontinuing a loss-making product, so that's part of marginal costing, whether or not we should continue making something. And then other marginal costing topics there: break-even, optimum use of scarce resources, so limiting factors, an income statement based on marginal costing, calculations for target profit, and price setting. So quite a lot of marginal costing has appeared in section B over the years. Standard costing and variance analysis, including flexing of budgets. So remember that whenever we're trying to find things like standard quantity and standard hours, it needs to be based on the actual output, not the planned output. But as I've said before, separate videos on that. Sources of finance have appeared in section B, and the old cash versus profit, so the differences between the two, so things that affect cash but not profit, and vice versa. Okay, so that's everything that's come up in section B, or most of the things that have come up in section B in recent years. Section C, those are your lovely big essay questions that everyone really looks forward to. So you get 2 25 markers, just like you had for paper 1. 5 of the marks are going to come from AO2, so application, and 20 marks are going to be for analysis and evaluation. So that's when you're building your chain of reasoning and giving a nice balanced answer, weighing up all the options. So previous topics for that have included standard costing and variance analysis, capital investment appraisal, marginal costing decision making, so closing a loss-making department or accepting additional work. Investor ratios have appeared several times, so looking at it from the point of view of someone who wants to invest in a company or choosing between one or two different companies. Sources of finance, so we've had a business converting from a limited company to a PLC, I think, in the past. And implementation of computerized budgeting systems. So this one, I think, was a couple of years ago. They were doing both of those things. That all came under one question. And professional ethics have also appeared in section C. Okay, so hopefully that gives you some idea of what to expect, what you need to be revising over the next, I don't know how many days, depends when you're watching this video, but certainly before 9 a.m. on Tuesday, the 6th of June. So all the very best with it. Good luck. Keep posting questions and comments, and don't forget to like and subscribe if you haven't done so already. Get on with your work.